The Dragonfly Doji at the bottom is interpreted as a bullish reversal indicator when it appears in a downtrend. It signals that even though selling pressure initiated the trading session, by the end of the session, buyers were able to push the price back up to where the session opened. This pattern is characterized by a long lower shadow with virtually no upper shadow, and the opening and closing prices are nearly identical. What makes the Dragonfly Doji especially significant is its position following a downtrend, indicating that the market sentiment may be on the verge of a positive shift. In the conclusion, embracing the transformation with the Dragonfly Doji at the bottom suggests recognizing the potential for a change in trend. Investors and traders can interpret the appearance of this pattern as a sign to consider adjusting their strategies, potentially looking for opportunities to buy in anticipation of an upward market movement. However, it is recommended to corroborate this signal with other indicators or patterns to increase the reliability of the bullish reversal prediction. This comprehensive approach aids in minimizing risk and maximizing the potential for profitable investment decisions. The Gravestone Doji, when it appears at the top of an uptrend, is seen as a bearish reversal indicator. This candlestick pattern is recognized by its small or non-existent body with a long upper shadow and little to no lower shadow, resembling a tombstone. This shape implies that during the trading period, buyers were able to push the price upwards, but were not able to sustain those levels. By the close, the price had fallen back to near its opening level, indicating a loss of momentum and potential weakness among the buyers. This scenario becomes particularly significant after a period of upward price movement, as it suggests that the uptrend may be losing strength and that a reversal to a downtrend could be imminent. Understanding the implication of a Gravestone Doji at the top of an uptrend helps traders and investors gauge market sentiment, allowing them to make more informed decisions regarding their positions. Identifying a Gravestone Doji at the top is critical for investors and traders who rely on technical analysis to make informed decisions. A Gravestone Doji is a type of candlestick pattern that signals a potential bearish reversal in the market, especially when it appears after an uptrend. Here, we will discuss how to spot this pattern and understand its significance. Firstly, a Gravestone Doji is characterized by a small body at the lower end of the trading range and a long upper shadow. The opening and closing prices are nearly the same, and the candlestick looks like an inverted T. This shape indicates that buyers tried to push the price up, but by the end of the trading period, sellers managed to pull it back down, closing it near the opening price. The appearance of a Gravestone Doji at the peak of an uptrend is a warning sign for traders. It suggests that the buying pressure is waning and sellers are beginning to take control. To confirm this pattern, traders look for a few indicators. 1. The Gravestone Doji should occur after a sustained period of upward price movement. 2. There should be a long upper shadow, which reflects the failed attempt of buyers to maintain higher prices. 3. It is crucial that the opening and closing prices are almost identical, sitting at the low end of the trading range for the period. For traders and investors, identifying a Gravestone Doji at the top of an uptrend is an alert to potential changes in market direction. It may not be a direct call to sell immediately, but suggests that it's time to exercise caution. Traders often wait for additional bearish confirmation following a Gravestone Doji before making a move, such as a subsequent drop in prices, to validate the reversal signal. Understanding and identifying candlestick patterns like the gravestone doji empowers investors to make more strategic decisions in the market. While these patterns are not a guarantee of market movements, they are valuable tools in the arsenal of anyone engaged in technical market analysis. A gravestone doji at the top of an uptrend is a candlestick pattern that market analysts view as a bearish reversal indicator. Imagine the market has been climbing. Stocks seem to be on an endless upward trajectory. Then, a peculiar shape appears on the chart, a candlestick with a long upper shadow and virtually no body, resembling a gravestone. This is the gravestone doji. To understand why it signals a potential shift in market sentiment from bullish to bearish, consider the mechanics of its formation. Throughout the trading period, buyers push the price up, but by the close, sellers have countered, pulling the price back down to near its opening level. The result is a candlestick that shows a struggle where the buyers could not maintain their control, suggesting their momentum may be waning. Deciphering market sentiment involves looking beyond just one indicator, but the appearance of a gravestone doji at the peak of an uptrend can be particularly telling. It reflects a moment of hesitation among investors, where the confidence that drove the previous upward trend starts to falter. If this pattern emerges amidst high trading volumes, it can further validate the concern that a reversal might be imminent. In summary, when a gravestone doji appears at the top of an uptrend, it serves as a cautionary tale. It tells us that despite the bullish momentum that has prevailed, there is now a significant enough concern among investors that the trend could reverse, making it a critical moment for reevaluating positions and strategies in the market. The gravestone doji at the top pattern is recognized as a bearish reversal indicator when it appears during an uptrend in the market. This particular pattern is characterized by a situation where the opening price, the lowest price, and the closing price of the security are approximately at the same level, with a long upper shadow that indicates a considerable distance between the high price and the rest of the trading prices during the session. When examining the nature of this pattern as a precursor to change, it suggests that buying pressure starts the trading period strong, pushing prices higher. However, by the end of the trading period, this buying pressure is overcome by selling pressure, bringing the price back down to near its opening level. This shift from buyers to sellers hints at a potential change in market sentiment from bullish to bearish. Understanding the significance of this pattern involves recognizing how it reflects broader market psychology. The presence of a gravestone doji at the top of an uptrend suggests hesitation and vulnerability among the buyers, who are unable to maintain their control over the market price. For those observing market trends, the appearance of this pattern calls for caution. It typically advises against making new purchases or suggests preparing for a possible downturn by implementing strategies to protect existing investments. In essence, the gravestone doji pattern acts as a warning signal that the prevailing uptrend may be nearing its end, urging investors to watch closely for further signs of a reversal. When a gravestone doji appears at the top of an uptrend, it signals a potential bearish reversal. This candlestick pattern is characterized by a small to non-existent body with a long upper shadow and no lower shadow, resembling a gravestone. It suggests that during the trading period, buyers pushed the price up, but were ultimately unable to sustain these higher levels, and the price closed near its opening value. Confirming the signal involves waiting for additional bearish indicators following the appearance of the gravestone doji. This can include a significant downturn in the next trading session or other bearish patterns that further imply selling pressure. Observing increased trading volume on the day the gravestone doji forms can also strengthen the reversal signal, as it indicates heightened activity and interest at this price point. To enhance the reliability of this signal, traders often look for the gravestone doji to appear in overbought conditions, with other technical indicators like the relative strength index, RSI, showing values above 70. Support and resistance levels should be considered as well. A gravestone doji that forms near a known resistance level adds credibility to the potential reversal. In essence, the gravestone doji at the top of an uptrend prompts traders to watch for subsequent bearish movements. By combining this candlestick pattern with other technical analysis tools, traders can better gauge the market sentiment and adjust their strategies accordingly. A gravestone doji appearing at the top of an uptrend is often considered a bearish reversal indicator. This pattern is characterized by a small or non-existent body at the lower end of the trading range, with a long upper shadow and no lower shadow. It visually represents a day where the market opens and closes at the low of the session, after having moved significantly higher at some point during the trading period. This pattern suggests that buyers initially pushed prices higher, but by the close, sellers had counteracted this buying pressure, bringing prices back down to the opening level. The reliability of the signal offered by a gravestone doji at the top of an uptrend can vary. It is crucial to consider it in the context of other market conditions and indicators. One key factor enhancing its reliability as a bearish signal is the volume of trading on the day the gravestone doji appears. Higher volume implies more significant market participation and can confirm the potential reversal. Additionally, when this pattern occurs after a prolonged uptrend or at resistance levels, it can provide further validation of its bearish implications. However, it is important to note that no single indicator should be used in isolation for making investment decisions. Traders and analysts often look for confirmation from additional technical indicators or price action in the following days to support the reversal signal suggested by a gravestone doji. These may include subsequent bearish patterns, a decline in prices below the low of the gravestone doji, increasing volumes on down days, or other indicators signaling a change in momentum or market sentiment. The gravestone doji at the top is considered a bearish reversal indicator when it appears during an uptrend in the market. To understand this, imagine a candlestick chart where each candlestick represents price movements within a specific time frame. The gravestone doji has a long upper shadow and no lower shadow, which suggests that during the period, prices were driven high, but then fell to close near the opening price. This pattern indicates that buyers lost control to sellers during the period, signaling a potential reversal of the current uptrend. In synergy with other technical analysis tools, the gravestone doji's predictive power is enhanced. For example, when combined with indicators that measure market momentum like the moving average convergence divergence, MACD, or the relative strength index, RSI, traders can get a clearer signal about the strength of the existing trend and the potential for a reversal. If the gravestone doji appears while these indicators show weakening momentum, it reinforces the bearish reversal signal. Using volume indicators can also provide additional context. An increase in trading volume on the day the gravestone doji appears suggests stronger conviction behind the potential reversal, making the signal more significant. Through the complementary use of these technical analysis tools, traders can better interpret market conditions and make informed decisions. The gravestone doji, when occurring at the peak of an uptrend and confirmed by other technical indicators, warns of a potential shift from bullish to bearish sentiment, allowing traders to adjust their strategies accordingly. A gravestone doji at the top of an uptrend is considered a bearish reversal indicator. This candlestick pattern is characterized by a small body at the lower end of the trading range, with a long upper shadow and little to no lower shadow. This shape suggests that, during the trading period, buyers were able to push the price up, but by the close, the price fell back to near its opening level. The presence of this pattern in an uptrend signals that buying momentum is weakening and a potential reversal to a downtrend may occur. Navigating the pitfalls associated with interpreting this pattern requires understanding that no single indicator should be used in isolation. Financial markets are complex and many factors influence price movements. Here are some steps investors might take to avoid common mistakes. 1. Confirmation. Look for further bearish signals in the following trading periods to confirm the reversal. Waiting for confirmation can reduce the risk of acting on a false signal. 2. Volume analysis. Consider the trading volume during the period the gravestone doji appears. Increased volume can reinforce the validity of the reversal signal. 3. Context matters. Evaluate the gravestone doji within the broader market context, including trends, support and resistance levels, and other technical indicators. This holistic approach can provide a clearer picture of potential market movements. 4. Manage risk. Employ risk management strategies, such as setting stop-loss orders, to protect investments if the market moves against your position. By being mindful of these considerations, investors can more effectively interpret the gravestone doji as part of their overall market analysis strategy, making more informed trading decisions. The gravestone doji, when appearing at the top of an uptrend, is considered a bearish reversal indicator. This pattern is identified by its characteristic shape, which resembles a cross or an inverted T. The gravestone doji's open, low, and close prices are almost the same, with a long upper shadow. This pattern suggests that the buying pressure at the start of the session was overcome by selling pressure by the end, indicating potential weakness among buyers. In strategic applications, investors and traders use this pattern as a warning sign to consider defensive actions, such as tightening stop losses or taking profits on their bullish positions. It represents a shift in momentum from buyers to sellers, suggesting the uptrend may be losing strength. However, it is crucial for traders to look for confirmation in the following sessions through additional bearish candlesticks or a gap down to validate the pattern's predictive power. Moreover, combining the gravestone doji pattern with other technical analysis tools, such as support and resistance levels or moving averages, can further enhance decision-making. For instance, if this pattern appears near a significant resistance level, it could strengthen the case for a potential reversal. Understanding and applying the gravestone doji within the context of broader market analysis allows investors to make more informed decisions and manage risks more effectively.